Before we get on to the next new Old Capital podcast, I just wanted to invite you on January the 17th and 18th to the DFW multifamily field trip. This is an exclusive invitation, so not for everybody because it's not for general partners. It's only for passive investors. So before you decide to put any of your hard-earned money into investing in apartments, we want to give you kind of an overview about what's going on in the North Dallas, DFW area in apartment investing. So it's going to be a classroom / bus tour. We're going to cover a lot of fun facts about what's going on in apartment investing in DFW. Some of the things that we'll be talking about is the state of the industry. Why Texas? Why DFW? Can you really buy some distressed assets? We're going to have you do some underwriting for dummies. So just some basic underwriting so you guys can understand how these transactions are put together. What's the pluses? What's the minuses? We're also going to have you do 2 underwriting case studies to kind of really figure out, is this a good deal? And then we're going to have you analyze it and present it to the group. So what your opinion is. You're going to have some conversations with some great KPs and some general partners, understand how the apartments are being financed today. But the key thing that I really want you to take away from is that we're going to jump in the bus and we're going to drive around to DFW. We're going to take a look at A quality properties, B quality properties, C quality properties, maybe some of the transactions we've financed in the past, but transactions that probably are for sale, that we want you to actually walk the property, talk to some of the management company that manages it or oversees it, and maybe the broker too that's possibly selling it. And you'll meet a Fannie Mae underwriter also to go into great deal about how these transactions are put together. So again, I want you to come be with us on January 17th and 18th here in the Dallas-Fort Worth area, Grapevine Convention Center. You need to go to the oldcapitalpodcast.com, Old Capital Podcast, to reserve that opportunity. So it's a minimal amount to invest in, but it gives you a great overview about what's going on in investing. So before you spend that hard-earned money into apartment investing, we want you to understand a little bit more background of what this is all about. So again, I'm Paul Peebles. Let's get to the podcast.
Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would typically be the man himself, the smartest guy in the room, Mr. Michael Becker, but he is on another due diligence assignment. So we have the second smartest guy in the room, Mr. James, the Professor Ang. James, how are you?
Great. Thanks for having me, Paul.
So I thought what we're just going to do is a little bit of a recap of 2023 and talk a little bit about 2024, just kind of get some ideas out there for people that have invested in apartments the last couple of years, are currently investing right now, and people that are on the sidelines thinking about investing in the future. So I kind of want to just talk a little bit about that and get some of your input of what you're seeing out there. Again, James, he was an underwriter for one of the largest banks in the United States before he made the move over to Old Capital. So I really respect his opinion about what he's seeing. He is a loan officer, a senior person with Old Capital, and he does a great job when explaining to people some of the different options that are available in lending. And so he has kind of a big picture. So I'm going to kind of pick his brain a little bit. But a lot of people don't understand really about what Old Capital does. I mean, we do our stuff right now on the Old Capital podcast, but we've been in business for over 25 years. We are a commercial lending originator of loans, and whether it's multifamily, office, retail, warehouses, we are the direct point of contact that you want to start with. We've closed over 7,000 apartment transactions. We sponsor several different types of meetings and events. One of the things that we're famous for, and I'm just going to throw out a couple that you may or may not know. Every year we do several Old Capital speaker series, and we bring in some of the best speakers in the country to come in and talk to you about what's going on. What do you think about the Old Capital speaker series, James?
Yeah, I mean, I think it's a place where people can come in. We usually have, 300 people here in Dallas. We usually have it over in Grapevine. And, for a couple hours, we'll get together and talk about what we're seeing in the market, but then also bring in a speaker, whether it's, a market economist, maybe it's interest rate specialist, just what questions we're getting the most. We'll bring in people who are experts in those fields and then, have them talk a little bit. And then also give you a chance to network with a lot of different people all throughout the industry because as a GP you've got to know a finance guy, but you also got to know an attorney, a broker, a property manager all throughout the entire thing. So great place for that, and we host that about once a quarter.
Talk a little bit about Strikeout for Homelessness and what we did before and what we're doing right now. Talk a little bit about our philanthropic activity.
Yeah, so before COVID, sort of 2019, we hosted our first 3-on-3 basketball charity tournament, and that went pretty well. And then, COVID happened, and a lot of people didn't play as much basketball. And then we held it again in 2022, and we had a couple of injuries. People hadn't been shooting around as much in 2020 and 21, and then they came back out full steam. And so we had a couple of injuries at that event, but both events we raised close to $15,000 to $20,000 at each event for a nonprofit here in Dallas called City House. And then this year we brought down the level a little bit, and we had a bowling tournament for, we call it Strikeout Homelessness, and raised another $20,000 for City House. And we had no injuries, so it worked out pretty well. And that was first quarter of this year.
Yeah, as everybody remembers, I broke my wrist last year doing it. So we made the executive decision that we're going to bowl this year, a little bit less stress on my old body. So thanks for doing those activities, James. Talk a little bit about the Old Capital Conference. That's like one of our premier events. How is that helpful for people?
Yeah, I mean, Old Capital Conference, we started back in 2017, and we've hosted it every year. So this was the 7th one. And really, that's sort of the biggest event that we throw. I mean, we have 500-600 people there, depending on the year and depending on the date. And this year we hosted it over at Frontiers of Flight Museum. And, you had all these different types of airplanes and space shuttles and all these different types of things surrounding you. So just a super unique venue. And, the theme really this year was Top Gun. And we don't want to see anyone crash out there. And so there's a lot of GPs in the cockpit right now and LP sitting in the back waiting for those peanuts to come down the aisle. And that's sort of what we went through. So we had a lot of fun with that and just did a bunch of videos and brought up some GPs, some listing brokers, and then also some guys who have been around in the industry for a while and got to interview them. So I thought that went really well.
Another outstanding event, James. And if you're listening to this, you've already found the Old Capital podcast. It's downloaded 60,000 times a month. So we appreciate your support on that. But something you may not know is the multifamily show that James does on YouTube. I think this is fascinating. You want to watch the video that comes out at least once a month and maybe once or twice a month. But talk a little bit about the multifamily show.
When COVID hit sort of in 2020, I just sort of did an update once a month. And that seems to be, we read so much every day. And so what I try to do is sort of at the beginning of the month, sort of put that all together into what we're seeing on the investing side and also the financing side, and try to condense it down into 20 or 30 minutes so that when you're at the gym or picking up your kids on the way to work or whatever, you've got 30 minutes to spend and catch up on the latest in multifamily.
Make sure you look at that, understand it, and then send it to maybe some partners out there, maybe some people that are interested in investing in apartments with you, just to get their level of knowledge up too. What's the best way for somebody to track that channel down, James?
You can type in multifamily financing on YouTube and it'll come up, or you can just put in James Eng on YouTube and it'll come up as well.
ENG, James ENG. Don't forget, Julie Peterson does the Zoom at 8. She has anywhere from 25 to 100 people per episode on a weekly basis every Tuesday. So Zoom at 8 every Tuesday. She does a great job at that. Remember that we closed $3 billion plus in apartment transactions last 3 years. So we kind of know what we're doing. We would appreciate it if you had any questions. Just give us an email or write us or pick up the phone and just give us a call. We've left Texas many, many times and jumped in the jet and flew to many different apartment meetings all over the country. One of the ones that I remember this in 2023 was in Las Vegas at the National Multifamily Housing Council. James, talk a little bit about that experience.
Yeah, I mean, in Vegas, everything's always a little different. So, whether it was the parties, whether it was meeting with brokers and owners all throughout the country, I think this year, I'm trying to remember back to Vegas, but I mean, everybody sort of was, the theme that came out for us was really survive the 2025. And that's, a lot of people had maybe the beginnings of capital calls at that point, and we didn't know how far interest rates were going to go because the Fed was just, every time you looked up, they hiked another 75 basis points. And so I think we'll see next month when we go visit with a lot of the same people and see what the sentiment is out there.
So we're invited to speak on many different stages across the country. Again, we jumped in the jet and we headed out to San Jose, Orange County, Miami. We're in Salt Lake City. So if there's a big event, you'll probably see Old Capital there. Again, we travel all throughout the country to kind of see you. So we get out of the office, up behind the desk, and we're approachable. Talk with us, and we'll give you an insight of what we're seeing about what's going on. So I really want to try to figure out what is going on these days, James. You're a good person to talk with, as I've mentioned before at the top of the hour here. Let's kind of talk a little bit about through the eyes of the apartment investor. What are you seeing right now as challenges and some opportunities if you are brand new or if you've been in multifamily? What are you seeing right now, James?
No, I mean, I think right now it's really when a deal comes out for sale, really the first question is like, is this seller under distress? And the distress is really coming from maturities or floating rate or both. And so a lot of deals were done in 21 and 22 on bridge loans that were 3-year terms. And so those are coming due. And then the interest rate caps associated with those is coming due. In November, 10-year treasury hit almost 5%. And that pretty much shut off any transaction that was going on. And now it's gone down 100 basis points in like a month. And so now we're sitting at under 4% on the 10-year. And so all the optimism is back from buyers who are out there wanting to buy, but sellers are like, everyone has whiplash. The 10-year treasury is moving so fast that people don't know how to price these transactions. Whether it's an A deal, B deal, or C deal, nobody knows how to transact on these deals. And so loan assumptions seem to be a flavor of the day just because you nail down that number one thing, the debt side. You know exactly your loan amount and you know your interest rate. So that takes away, half your problem. And then the other half is going out and raising equity. And the equity is going to ask, what type of loan are we getting on this deal? And if you tell them, hey, we're getting 65% at 3.5%, that helps a lot of equity investors get comfortable. And so, the debt and equity is getting harder and harder out there. And so that's making people push these cap rates higher and higher as well. We're starting to see a little bit more distress transact. So whether it's listing brokers bring out deals and, on the email blast, it says distress, or we're just seeing lenders post deals for foreclosure. So we saw a large deal portfolio sort of throughout sort of the major metros in Texas on a investor out of Austin. And they own 25, 30,000 units. So it's not a small syndicator, a large syndicator. And they just bought at the top of the market with a bridge loan. And they just can't feed these things anymore. And so the lender's just saying, well, if you're not going to pay me, I'm going to foreclose on you. When these deals come out, it sort of is dictating the price. It's almost like two cars driving down the road and you're playing chicken with each other, who's going to dodge out first. And right now we're seeing more sellers having to come back down because there's less and less buyers out there in the market. And so that's really what I think 2024 is going to be all about, is if you do not have to sell. So I'm calling this the year of the refi. So if you have a bridge loan and you can refi, then you probably will refi because you probably will not sell next year. But if you cannot buy the interest rate cap, if you cannot refi, then your last option is to sell. And majority of the time, you are going to lose some of that equity that you put in the deal originally.
So, James, you were on the stage last Saturday in front of 150, 200 people. What was the general consensus of feelings about what's going on in the market itself? You were in front of all these apartment buyers, syndicators. Tell me a little bit more about how that conference went.
Yeah, I mean, I think there's really three groups. The first group is guys who maybe bought in 18, 19, 20 with sort of Fannie Freddie fixed rate debt. They're fine. They're not worried about it. They're still doing distributions to their investors. They're doing no capital calls. The second group is really guys who maybe bought in 21 and 22, and they put a bridge loan on, and now those loans are coming due in 24 and 25, and their interest rate caps are running out. And so they're having to do a capital call for the interest rate cap or even for a cash in refi. So that's the second group, which is definitely the most nervous group out there. The third group is really just new buyers. So new buyers coming into the market. They've been outbid for 2 or 3 years, and now they finally see a chance to come in and buy in DFW or Austin, San Antonio. And Fannie and Freddie are here. 10-year Treasury has dropped, and they're in position to go out and buy. And their biggest challenge will just be, now that the investors out there who have invested in these deals the last couple of years haven't seen the returns, the distributions that they were expecting, how do you go out and raise money from those people? And so that is the challenge for those new buyers. The cap rates will be better than they have been the last couple of years, but the equity will be harder.
Let's talk about specific transactions. Was there a deal, whether you did it or somebody else did it? Was there a specific transaction that stood out in 2023 in your mind?
I think just in the last quarter or so, what we've seen is there seems to be sellers that are going early. And what I mean by going early is that they are not waiting for the maturity in November or December of 2025 or 2024, but they're willing to cut their losses now. And that might save half the equity or a third of the equity. And they're willing to go now. So, there was probably 15, 20 deals that have sold in the last 2 months here in DFW. And 3 of those were deals where the seller went early and they basically cut their loss. And they said, look, we're going to return 30 cents on the dollar. We don't love it, but we're going to give you that money and you can go out and buy other deals or do something else, because they were concerned that it might go to zero. And so I think we're seeing a little bit of that. So we're definitely seeing distress in that piece. But then also, the other thing probably is that the summer of this year, when 10-year Treasury was, 3.5, a lot of deals got done. So a lot of Fannie Freddie deals got done at really, 5 to 5.5% fixed. And I think that's where the market needs to be in terms of meeting sort of buyers and sellers. And so we still have a little bit of ways to go on that. But right now, sitting under 4, I think people feel pretty good.
What type of deals are trading in, say, Dallas, Fort Worth, North Texas? Are they large deals, small deals? Is it all just based on how much equity you can raise?
The A deals, they definitely have not had to go as far on cap rates, right? So if, it was a 4 cap, now it's a 5 cap, it's maybe expanded 100 basis points. So there's still buyers on that stuff. I would say the B stuff, it's probably expanded 150 basis points. But the C stuff, we really haven't found how far you have to go on the C stuff in terms of cap rate. And so a lot of people, on a B deal, you maybe be at 60%. On a C deal, you need to be at 70% leverage on a lot of these deals. And so when 10-year Treasury was 5, you need to be at north of 7. So on a cap rate. And so that's what we're seeing is a lot of these C deals are having to go to 7, 7.5 on cap rate to get sold.
So really, let's talk a little bit about that. So what does the delta have to be? And maybe it's positive leverage or negative leverage for a short period of time between the all-in interest rate and the cap rate.
On A deals, I think people are willing to accept probably 50 basis points of negative leverage. I think when there is sort of a pathway to positive leverage, right? So rent growth is still positive and you're able to get trade outs probably in the last month or so, October, November of this year, we're starting to see rents go negative pretty much in all the major markets where there's a lot of supply being delivered, and there's more supply coming next year. And so we're seeing new lease trade outs decline or be negative, but then renewals are still positive. So you sort of have to look at the rent roll and figure out, all right, how much can I bring the existing tenant base up to market and build that into your model and see sort of what cap rate that is. And, I would say on B and C stuff, people are not walking in with negative leverage right now.
And where's the equity coming from? Where's the money for the equity, the down payment coming from to do these deals?
Yeah, I mean, I think there's definitely still some syndications out there, some 1031s out there, but for the most part, we have not seen a ton of institutional activity on these larger deals. What we're seeing instead of people taking out, 10 property portfolios, they're just selling deals individually, one by one by one by one, because we're not seeing large portfolios go right now.
And how about, are you seeing any value added transactions? I mean, the key word back for the last 7 or 8 years is value added. This is an opportunity to put $3,000 to $5,000 per unit in the deal. You're able to push up the rents. Are you seeing that today? What's the value added market look like these days?
I think everything's value add. So everything, every broker, every pitch deck has value add on there. I think it's probably going to be a little bit different value add now, right? The new value add is probably burning off concessions. So if you're buying an A deal and it's given 3 months free, you're going to try to get that rent rolled down to no concessions or 1 month concessions instead of 3. So I think it's more of a loss to lease burn off versus a raise the rent $200.
So really what you're saying is that every flyer that comes out, every offering memorandum that comes out, it all says value added because it's like the retailers that stick on the front window sale. And that brings in a bunch of people that are driving by and they think maybe there's a good price because it says sale on it. So they turn around, they go into the retail place. Value add has been that way to attract a lot of buyers into the market. But who's lending these days? I mean, we talked a little bit about bridge loans the last couple of years. Who's lending today?
I mean, a lot of the deals that just closed have been loan assumptions. So that's, Fannie, Freddie loan assumptions. On some of the A stuff, there's people still doing non-recourse bridges, but they're, instead of the full 80% levered, they're 60% levered. And then Fannie and Freddie are really the dominant players in the multifamily space. So majority of the new debt is going Fannie and Freddie. And a lot of the loans are just going 5-year. So in the past, they had almost always gone, 10-year or longer. But people feel that this is sort of the top for interest rates. And so they're just going to put a 5-year deal on there. It's inside of what you would pay on a bridge. So SOFR plus 3 on a bridge, you're at 8%. On a 5-year deal right now, you're probably 6.5. So that gives people, nobody loves it, but they feel like they're buying at a good basis. And, a couple of years from now, they'll be able to refi or sell the deal and not have a huge prepay.
You talked a little while ago about distress in the market, whether it's coming in the future or it is here today. I mean, how do people who want to get into multifamily and they're trying to find these distressed assets, how do they actually find these distressed assets? Do they call the apartment owner? Do they send out yellow legal pieces of paper that says we'll buy your property? I mean, how do people, regular Joe, that are looking to buy apartments, how do they actually find these distressed assets?
I don't know if regular Joe is going to be able to find them. They might end up on the courthouse steps to some extent, but a lot of these deals they're either going to go back to the lender or have to be worked out with the lender. Some lenders are set up to take on these deals and other ones are not. It's just going to depend on what type of loan it is, whether it's on the balance sheet of some lender or it's in some securitization. There's going to be all types of different things that are going to happen. And we've seen deals where people have essentially listed the deal just the same way as a normal deal in the hot market. Let's just list it up and see what the best price is. And so we're seeing brokers bring those deals out. So you've got to know the brokers, you've got to know the owners, you got to know the lenders. I think these deals are going to come at you in a lot of different ways. And, I think the main thing is that the real question is, how are you going to finance it? Right? Like, so if this guy's in trouble and you're going to step in for this guy, he can't afford the payment. How are you going to afford the payment? Maybe it's a reset basis. Maybe it's new equity. Maybe it's money to put into rehab of some of these units. So, what happens is a lot of these deals, when the loan payment is so high, they're trying to make the loan payment and the property gets no money. And so Fannie and Freddie and these bridge lenders are worried about their collateral because all these deals are non-recourse. And so that's the only thing they have to go back on. They're not coming after you personally for anything. And so they want you putting money back into the property. And so a lot of these lenders, they're going to switch out sort of the pilot and bring in the guy in the back of the airplane as a new pilot. And maybe that new pilot has some extra money to put into the deal. So I think there's going to be a lot of different ways these deals get put together. I mean, you just have to be prepared. Your team has to be ready and your equity's got to be ready.
So we're getting on close to the end of the 2023 and looking forward into 2024. What are some of the you're thinking that you're going to see in the future? I mean, do we think these interest rates are down right now, are going to go farther down, or is this just a head fake for them to go up? Talk a little bit about what you're seeing in the market.
Nobody can time it and nobody's perfect. I mean, everybody who locked at when 10-year was 450, they thought they were 50 basis points inside, but no, the market gave you another 50 basis points like 2 days later. So, I think one is you got to be prepared if you do have a bridge loan that's coming due in 24 or 25, figure out sort of what that cash in is. And, we've seen a lot of people be able to go out and raise the equity on these deals where you're taking a bridge loan and converting it over to a Fannie, Freddie, or HUD deal. And you're really just resetting the timeline, and you're not having a forced sale right now. You can sell in 3 or 4 years from now, and the market's probably going to be better than it is today. And so I think you got to be in position though, right? Because we've seen how fast 10-year treasury can move, with one Fed meeting. And so usually the market has 4 or 5 rate cuts next year. They usually just predict 25 basis points at a time per meeting, but usually something happens that it moves faster. And so if it moves faster, you've got to be ready. And I think people are coming into 24 a lot more optimistic than 23.
Let's go back to 2024 and let's just kind of envision about what Old Capital is going to be doing in 2024. Can you give us a little bit of an insight, just maybe for the first quarter or two, of some activities that we're starting to see?
Yeah, I mean, in January, we're going to be doing our speaker series. We're bringing in JP Conklin. He's going to come down and talk about interest rates. So he'll probably, get his crystal ball out and give you what he's seeing out there. And then along with that, before and after, we're going to be doing a little field trip. So we're going to go out and see some of these properties that we financed or that maybe are on the market. We'll see how many deals come out, and hopefully it's not snowing on us January 17th and 18th. So that's really the first quarter right now on tap. And then, NMAC comes around right around there. So we'll go out to California and visit sort of with national players and see what they're seeing out there as well.
Yeah. I mean, we'll be at the Mortgage Bankers Association in Southern California sometime in February. So we have a packed schedule coming in for the first quarter of 2024. James, have you released yet the theme or the idea or the time for the Old Capital Conference so people can start putting that on their calendar, or is that a TBD?
It's a TBD, but I stole this from another conference. If you go to oldcapitalconference.com and put in your just name and email, then you will be put on the list so that when it does come out, you will be the first to know.
That's great. Let's jump back one more time onto that DFW multifamily field trip coming up here on January 17th and 18th. Again, that is just not an Old Capital event. That is going to be the Dallas, DFW multifamily apartment investors group. They're sponsoring in that. And those are our friends over at CBRE, Rowan Properties, Marcus and Millichap, Colliers, SPI. There's probably about 12 different groups that are sponsoring this field trip. Again, we're going to get you out on a bus. We're going to drive you around. You're going to take a look at some of the properties that at least we've closed. The classroom will be on the bus. We're only looking for 50, maybe 55 people on the bus. So it's going to be almost one-on-one understanding about what's going on. This is not for apartment syndicators. This is for passive investors. So no deal sponsors. So it's a 2-day event. We're going to be January 17th, starting off about 12 o'clock, and we'll go to about 6. And then JP Conklin comes in and talks from maybe 6:30 to about 8 o'clock. And then we'll go out for cocktails afterwards, do a little networking. And then 18th, we start off early. We go the entire day on the bus, and we go out and take a look at all kinds of different things. I think hopefully we'll give you the state of the industry about what's going on in Texas and why DFW. And then James will lead the discussion on basic apartment underwriting for dummies. And then he'll walk you through maybe 2 underwriting case studies. And we want you to tell us, is this a good deal or not? And then we'll have an attorney talk a little bit about a syndication attorney, talking about a little bit about real estate law and how to raise money legally. If you're thinking about doing that at some period of time, there'll be a property management company coming in, talking a little bit about, what does it take to be the best property manager for your property, what you're looking for. And again, we're walking and talking on feet in the ground, boots in the ground, A, B, and C properties that are in this marketplace and possibly for sale, and you'll get access to the entire property. So I think that's one of the that's a great fully packed venture. But I think probably the funnest thing that I like it, I'm calling it the LOI challenge game, the letter of intent to buy challenge game. James came up with this, and I think this is phenomenal. It's a great teaching lesson about how this DFW, how the apartment market, how you can buy properties, how it works. James, can you talk a little bit about that?
Yeah, I mean, a lot of people don't understand sort of the process of buying a deal, whether it's putting together the LOI, so the components of that, putting your team together, and then sort of the back and forth with the brokers. Obviously, if you're the only buyer on the deal, then, it's pretty straightforward. You just put out your terms and the seller takes it and you move on. But, in a competitive market like DFW on a deal that's, 150, 200 units, there's going to be more than one guy. And so making sure that your offer gets accepted and sort of coming up with terms and that back and forth is sort of what we're going to play along with.
It's fantastic. It's so go to oldcapitalpodcast.com, oldcapitalpodcast.com, and RSVP for that event coming up January 17th and 18th in DFW area at Grapevine Convention Center. We look forward to seeing you at that period of time. James, any other lessons or ideas that we should be sharing today?
No, I think that's it. I mean, I think, one of the things that if 2024 is the year of the refi, what's going to be driving a lot of these refis is maturities. And so, we get access to a lot of different databases, but, whether you want access to maturities in Texas or maturities in your market, this is one of the things that we can help you with is sort of send us an email and we can send you a list of upcoming maturities, maybe in your market. And so I don't know if that guy is going to make the refi. They might do a refi, but they also might just sell the property. And so if you're out there looking at a market, obviously we covered Texas in depth. And so we know Texas pretty well. But if you're looking at other markets, feel free to reach out to us and we can get you that list.
We have a great database. So we appreciate everybody listening. James, thank you very much for jumping on. We appreciate that too. Again, I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.